Right then, so looking at the euro, yesterday I did an analysis and we talked about the W formation on the. Let me see what it was. Must have been, yeah, I didn't. Bear with me. So we looked at the W formation, the pullback, and the continuation. So we looked at the market heading higher yesterday, and that's exactly what we got. Um, so at this point, we've come up into a resistance area. Now we've got this bar over here as an attractive target, 109.05 figures. So above there, you're likely to have stops and money. Uh, so that could be an area of interest for the forthcoming days. Now, at this point, we've got 3 days of higher highs and lows. Okay, so it's part of the 3-day cycle. We're up, up, and up. And you'd anticipate a correction to potentially move higher. So you've got all of these people that are in the money still. So I'd be looking for a correction. And that is not to say that we can't move up a little higher. I guess maybe the 70s, 80s would be an area that this could head into. Before the correction. Just want to bring that down a bit. So we're likely to see a huge amount of volatility around the Fed. So all of this here is vulnerable for whipsaw price action. Um, so it's not very fruitful really trying to pick levels and so forth when you've got such a major event coming up. But I didn't anticipate all of this to be taken out over the Fed. Um, we're looking at 100 pip moves round turn, really, as the market digests the various scenarios that could come off the meeting today. So I'm afraid that I've got nothing more than that to add, really. Longer term, pull that right out to a weekly chart. Longer term, we're heading up to the M formation's neckline, which I called at some point last week, I presume. Probably, I did some analysis on that. I'd have to look it up, but this is all analysis that I've just basically pulled up from the charts. So you've got this weekly M formation that continues to play out, again targeting 109 the figure or thereabouts on the longer term viewpoint. Nothing really more to add than that. Go over to the Dixie, which is essentially a mirror image of the um, euro on the flip side. We have a scenario whereby we've come into the W formation's neckline or thereabouts. So there could be further to come on the Dixie as well to the downside. But bearing in mind, there are many days still left of the week, so we could see a correction in the dollar higher, profit taking before the move down. So we could see a scenario where we're correcting up only to come back down while being on the front side of this bearish trend. So we could move up to come down, and that would be reflected in the mirror image on the euro. I think we've been asked about the pound as well. We started out the week, so we've taken out the initial balance on Wednesday. So the initial balance Monday and Tuesday. So it's Monday, Tuesday. So Monday offered, moved up in a short squeeze, parabolic move, corrected, a shallow correction. So there's plenty of scope now. We've taken out, so we've got breakout traders now in the market on that move. So I would say we could be headed into a trap here for a move lower. So again, the Fed is bound to be the catalyst, and any which way this decides to go. But my bias is to the downside. But obviously, I'm not just going to sell because I think it's going down. You want to see a deceleration in this move, so a correction, taking out significant structure. We've got this bullish trend in place, bullish trend in place. So you'd want to see at least this micro trend line broken. So turning red to signify that it's broken. So if you get the market breaking below, potentially moving up, but starting to show signs of decelerating on the lower time frames to cement the thesis for the correction into all of this length.